Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, 5th day of August 2020, and this is the Daily Report for Gold and Silver. Another historical, monumental rise in gold pricing, with December futures gaining about $30 on the day and closing above $2,050 per ounce. Of course, it's hard to believe that it was just on Sunday, a few days ago, in which we entered the market from the long side at 1997, in other words, under 2,000. On today's report, we are going to look at a couple of different models of where we believe gold could trade to, where we could see a correction, and where inevitably I believe this rally will run out of steam. But first, to the price board. This has been another day that will go down in the history books. It's a record-setting day for gold, reaching a new all-time record high, with gold futures basis the most active December contract, closing up an additional $32 and is currently fixed at $2,053. It is hard to believe that as recently as yesterday, gold was trading at approximately $1,993, and we have seen it gain well over $60 in the last two trading days. Nonetheless, we are looking at gold in a new record high. A lot of those gains today had to do with the continuation of a falling U.S. dollar. Dollar down approximately 55 points and is currently fixed at 92.82. When we look at spot pricing, well above 2,000 at 2,037.10 after factoring in today's gains of $18.49. Silver had a dynamic gain of over 4%, $27 per ounce at this point, $27.07 after today's gains of $1.05. Palladium and platinum also gained. Palladium up about $56, $2,227. And lastly, platinum up about 4% at $994. In terms of the EFTs that we are actively trading, SLV, or iShares Silver Trust, gained 3.3%, $25.05 per share. GLD gained almost a full percentage at $191.35. And lastly, Nugget gained about 0.25% at $113.26. Let's take a look at our technical studies. It is hard to believe that since mid-March of this year, we have seen gold move from approximately $1,450 to today's closing price, which is above $2,050. In other words, we have seen gold increase in value to the tune of $650 over the last 4.5 months during this global pandemic. However, even with the remarkable gains, we can see that came through as a period of rallies that would be then followed by a period of congestion in which we saw the market trade in essence range-bound between approximately $1,650 on the low and $1,760 on the high. In fact, after trading sideways through the end of March into May as well as June, we simply saw gold take a small stair step to the upside. That occurred at the end of June when market forces took it above the recent tops, and we had a new level. And although the market was really trading sideways, it was defined with highs at about 1830 and lows at approximately 1760. That being said, that all changed really on the 20th of June. That is the first occasion in which we saw a closing price above these recent tops. And then we had a race to new all-time record highs, with the first instance occurring July 27th. That would be this candle right here. And that is when market forces took gold pricing above the former high of about 1920, closing at 1931. From there, we broke our second and critical level above $2,000 for the first time in history. It's hard to say this, but that occurred just yesterday when we saw gold trade from 93 on the open and closed at $2,021 by the close. Today, we certainly saw follow-through buying, taking gold prices to a new all-time record intraday high, 2,070, and closing, or currently fixed, I should say, at 2,053. After issuing a trade alert to go long December gold, as well as going long silver and maintaining SLV, GLD, and NUGT, we spoke about the fact on Monday that we would present some different models to forecast where we believe gold prices could be headed and what to look for in the very near term. The chart that we have on the screen is a daily chart. We have added a Fibonacci extension in which we are looking at a wave 3 move beginning at 1450. Taking us up to about 2149. In other words, we believe that there is still more upside room to the tune of just shy of $100 in gold. However, following the recent run-up, whether it concludes at 2150 or somewhere in between current pricing and there, at some point we will see the market retrace. And so this model is looking at a correction that takes us approximately to 1922. And from there, we're calculating two different levels, the 61.8% extension of wave 3 to wave 5 and a 0.78 or 78% extension. The most conservative of these numbers takes us to 2351 after we have a small correction in the market, and the most optimistic number that this model suggests is that gold could trade as high as 2465 before the conclusion of the last leg or fifth wave of the current rally. The second model that we will look at today is a variation on the one we just looked at. The difference is the depth of the correction, whereas the most optimistic model is suggesting a more shallow correction, taking gold pricing to approximately 1940. The other model suggests a much deeper correction, moving gold prices from highs at approximately 2150 down to these lows at about $1,833. The subsequent fifth wave would then be a much more conservative view after correcting approximately $200. We could then see the last leg of this rally move anywhere between 2262 to 2375. That is based on a 61.8% and 78% Fibonacci extension. On tomorrow's show, we will review a couple other models and hone in on our current silver trade. This has been Gary Wagner, wishing you, as always, good trading. Maintain your current long positions and stops. We'll talk to you tomorrow for the next daily update and review. Bye-bye.